Have you ever considered joining a prop firm to get funded for forex or stock trading, but worried about telling the alleged ones from potential scams? You're not alone. Prop firm scams are on the rise, so it pays to be vigilant. In this video, I'll share tips on how to spot red flags and avoid getting ripped off by shady prop firms. Stick around to the end where I'll summarize the key takeaways. Let's get started. Prop trading can be an attractive opportunity to get funded and access markets you couldn't trade on your own. But it also carries risks, especially with new firms popping up all the time. While prop trading itself is legal, these firms operate in a regulatory gray area, meaning you bear more responsibility for assessing them. So what are some telltale signs of sketchy prop firms to avoid? We shall cover the major red flags, from too good to be true promises, unrealistic trading conditions, fake reviews, and more. Forewarned is forearmed when it comes to protecting your capital. Let's get into it. Red flag number 1. Unclear trading rules. One big warning sign is vague or contradictory trading rules. A legitimate prop firm should be upfront about their requirements, limitations, and policies around trading strategies, leverage usage, and things like copy trading. Watch out for firms with ambiguous rules or hidden clauses claiming certain trading approaches break their terms. This gives them leeway to fail traders after funding by claiming rule violations. Always ensure the prop firm's trading parameters are crystal clear before paying any fees. Red flag number 2. Fake Trustpilot reviews. Many prop firms know traders check places like Trustpilot for reviews. So shady firms simply pay for or create fake 5-star ratings to appear legitimate. But often the reviews sound too generic, lack details about the actual company, or seem irrelevant to prop trading. Veer digging on review authenticity. And branch out beyond just Trustpilot, which can be easily manipulated. Red flag number 3. Newly launched firms. This next red flag is brand new prop firms without an established track record. On the one hand, new companies can bring fresh ideas and innovation. On the other, they lack proven experience running a prop trading firm and have no reputation to uphold. The risk is higher that they won't have solid infrastructure or business practices to support traders. I'd suggest waiting at least 6 months to see their reputation develop before engaging with an unknown new prop firm. Red flag number 4. Promises of get rich quick. Now this one may seem obvious, but still happens a lot in trading. If a prop firm's owner or marketing materials promise you'll quickly get rich with them, exercise extreme caution. Legit firms know consistent profitability is incredibly difficult even for seasoned traders. Anyone guaranteeing quick fortunes is likely running a shady operation or scheme. Don't get swayed by images of luxury cars or cash flashing across the screen. Assess their claims with healthy skepticism. Red flag number 5. Allowing demo HFT strategies. Here's a more technical red flag, but an important one. Does the prop firm permit using high-frequency trading or scalping strategies during their demo evaluation? This can be risky if they fund you based on demo profits, since slippage on real trades will be far higher. Savvy traders can take advantage of limitations in demo environments. So firms allowing demo HFT raises questions about their overall trading knowledge and business practices. Red flag number 6. Extremely low evaluation fees. Now we don't want to say cheap is always bad when it comes to prop firm fees, but firms offering demo evaluations for $50 or $100 should make you pause. Legit firms need to charge enough to cover their operating costs and risk management. Extremely low fees often mean the firm isn't being selective and lacks proper controls, or traders who pay next to nothing likely won't get the best trading environment if they do get funded. There's probably a reason the fees are so low. Red flag number 7. Unprofessional staff and support. Consider how the prop firm's employees interact with traders too. Do they demonstrate in-depth knowledge of markets, regulations, and operations? Or do they seem confused or provide robotic, scripted-sounding responses? Understaffed or undertrained support can indicate a prop firm isn't investing in the right resources. Look for knowledgeable teams truly committed to trader success. That starts with professional staff. Red flag number 8. Anonymous companies. While prop firms can operate offshore or without major regulation, they should still have some formally registered entity you can validate. So beware of companies unwilling to provide legal registration details or that only provide a sketchy P.O. box address. Even offshore incorporation is traceable. The lack of transparency around company registration should be a huge red flag to potential traders. Red flag number 9. Poor customer service. Expanding on that last point, how responsive and helpful is the prop firm if you have account questions or issues? Top prop firms understand great service is crucial for traders. Watch out for firms with limited communication channels, slow response times, or that leave inquiries unresolved. If they won't invest in customer support pre-funding, chances are you'll be neglected once they have your money. Red flag number 10. Massive account size promises. Some shady prop firms try to hook traders by boasting they offer account funding exceeding $1 million or similar huge amounts. But then the fine print reveals most traders only receive a tiny fraction of that. Some of these firms don't even have sufficient capital to fund accounts at the levels they claim. Be wary of outsized allocation promises that seem too good to be true. It often indicates instability or deception. Red flag number 11. Selling signals and trading bots. Reputable prop firms focus on your trading success, not pushing products for added profit. Does their model seem built around getting you to buy forex signals, bot subscriptions, or other add-ons? This indicates a conflict where they may benefit from your losses if it means selling you more stuff. Stay away from firms more interested in promoting services over your skills development. Now that we've covered the major red flags to watch out for, let's discuss how you can actively avoid getting ripped off by shady prop firms. Here are some practical tips and best practices to protect yourself and your capital. Thoroughly research the prop firm online and search for reviews and feedback beyond just their website and Trustpilot. Visit forums like Forex Peace Army to see traders discussing them. You can ask for legal registration documents. Legitimate firms should willingly provide registration proof like incorporation certificates. Verify addresses are real offices, not just P.O. boxes. You should review the agreement terms extensively. Don't skim the documents. Read their rules, policies, fees, profit splits, and liability clauses closely before signing anything. You can contact their support team with thoughtful questions to gauge responsiveness and transparency. See if they answer clearly or seem evasive. Research the founders, CEO, and leadership. Do they have extensive investing experience or unclear LinkedIn profiles? You should ask how they hedge risks. A solid prop firm should explain how they manage market exposure and balance their books. Is their risk approach robust? You should beware of rapid account scaling promises. Prop firms need to assess traders over time. Instant huge account funding claims likely indicate an unsustainable model. Start small if evaluating a new firm. If testing out an unproven newer firm, invest minimal upfront fees in case issues arise quickly. Know your profit split and costs. Factor in monthly fees, commissions, and profit percentage you'll retain. Ensure the structure is fair. Don't believe get-rich-quick hype. Assess claims cautiously. Consistently profitable prop trading takes immense skill and risk management. The bottom line is you have to do your due diligence. Take the time to thoroughly vet any prop firm and ask critical questions before proceeding. If something seems off or too good to be true, it likely is. Stick to reputable firms, start small, and keep an eye out for those red flags we discussed. With the right prep, you can find a great prop trading opportunity. Let us know if you have any other questions. We are always happy to help traders navigate this space carefully. That wraps up this overview of avoiding prop firm scams. Please subscribe and hit the notification bell. See you next time.